Hey there, and welcome. Today, we're diving into a really important document that can literally save you from some major financial headaches, the HMRC Certificate of Residence. This whole guide has been put together by the tax specialists over at Pro Tax Accountant, and trust me, they see the costly mistakes people make every single day. So, let's get you up to speed.
Right, let's jump straight in. If you're earning any money from outside the UK, maybe you're a freelancer, you run a business, or you've got investments overseas, have you ever had that little knot in your stomach worrying that you might get taxed on it here in the UK and get taxed again in the other country? Well, that's not just a worry, it's a very real risk, and it catches so many people out.
And look, this isn't just some theoretical problem. This quote right here, it's based on a real post from a business owner who was completely at their wits' end. They thought they'd done everything by the book, got an official document, sent it off, only to have it rejected. Their money was just stuck. And that is the exact kind of frustrating nightmare we're going to solve for you today.
Okay, so here's our game plan. First, we're going to break down the double taxation trap. Then I'll show you the official key to get out of it, the Certificate of Residence. We'll cover exactly who needs one, the step-by-step on how to apply, and a crucial final step that, honestly, most people completely miss. We'll also chat about how to get expert help if you need it.
Right, first up, the double taxation trap. Before we get into the solution, it's so important that we really get our heads around the problem itself. What exactly is double taxation, and how on earth does it happen so easily in today's world? So in the simplest terms, it's exactly what it says on the tin. The same 100 quid of income gets taxed twice, once where you earned it, and again where you live. It's an absolute nightmare for freelancers, businesses selling overseas, even folks with foreign pensions. Let's paint a picture with an example.
Okay, so meet Chloe. This scenario is super common. She's based in London, but her money comes from a platform in the US. Now, that American platform is legally required to withhold tax, often at a whopping 30%, unless Chloe can prove where she's a tax resident. Without the right paperwork, they could take a huge slice of her income before she even sees it. And on top of that, HMRC is still going to want their cut of her UK profits. All of a sudden, her cash flow is in chaos. That's not all. Here's where most people go wrong.
So how in the world do you unlock those frozen funds and just sidestep this whole tax trap? Well, thankfully there is an official key for this lock, a specific document from HMRC designed for this exact problem. And this is it, the Certificate of Residence, or COR for short. Its #1 job is to prove to another country's tax authority that you are a resident right here in the UK for tax. This is what lets you use something called a double taxation agreement, or a DTA. Think of a DTA as a pact between two countries that says, hey, let's not tax the same money twice. And the Certificate of Residence, well, that's your golden ticket to use that pact. And here we go. This is what one actually looks like. It's not some crazy, complicated form. It's a formal letter straight from HMRC. It confirms the company's details and, most importantly, certifies its UK tax residency. This single piece of paper is the proof a foreign tax authority needs to release your funds without taking a huge tax bite.
Now, you might be looking at that and thinking, okay, this is for big companies, not me. But you'd be really surprised by just how many people and businesses need one of these. Stay with me. The next point might surprise you. You can see just how wide this net is cast. We're talking about a freelance designer with a client in Paris, a small company in Leeds selling software to the UAE, or maybe someone living in the UK who gets a pension from Germany. They could all need one. It's even vital for foreign nationals here in the UK, like a Greek citizen who needs to prove to the authorities back home that they're paying tax here now. Okay, here's a pro tip that could save you so much time. You have to know the difference here. A certificate of residence is specifically for claiming benefits under a tax treaty. But if you just need general proof that you're a UK resident, say to open a business account abroad, you actually need a letter of confirmation. Applying for the wrong one is a super common mistake, and it leads straight back to that rejection we talked about. All right, let's get into the practical stuff. How do you actually get your hands on one of these certificates? The process is pretty specific, and it changes a bit depending on who you are, an individual, a company, or a trust. So before you even think about filling out a form, do your homework. Get this info together. HMRC is going to want to know exactly why you need it. Which country is it for? Which specific tax agreement are you using? What kind of income is it? Dividends, royalties, pension? Having all this ready will make the whole thing so much smoother. Now, for individuals and sole traders, like our developer Chloe, the process is actually quite straightforward. The quickest, easiest way is to log into your government gateway account and use the online service there. The only exception is if the foreign tax authority has given you their own special form that needs an official HMRC stamp. In that case, you'll need to post it to them.
For limited companies, things are a bit more formal. Most will use the dedicated RES1 online service. But check this out. Here's another brilliant tip for larger businesses that have a December year-end. HMRC actually lets you pre-order your certificate in November. This means the certificate for the year ending in December can be ready to go on January 1st. That is a massive advantage for planning.
So you get that brown envelope from HMRC. You open it up, and there it is, your shiny new Certificate of Residence. Job done, right? Time to send it off and get your money? Well, not quite. This next step is absolutely critical, and it's where so many people get stuck, ending up right back at square one.
And the big question you have to ask yourself is this. Just because it's an official UK government document, does that mean a foreign government will just accept it, no questions asked? Well, the answer, in a lot of cases, is a flat-out no. It often needs one more official stamp of approval to be legally recognized overseas.
And that final stamp is called an apostille. It's basically a certificate that gets attached to your certificate of residence by the UK Foreign Office. All it does is verify that the signature and the stamp from the HMRC official are the real deal. Without an apostille, a lot of foreign authorities will just look at your document and say, nope, not verified, and reject it. And this isn't some rare thing either. It's incredibly common across Europe. Countries like Spain, Greece, Italy, and Portugal almost always demand it. It's also pretty standard in the Middle East, in places like the UAE and Saudi Arabia. Forgetting this step, or just not knowing about it, can waste weeks, sometimes months, and leave your income stuck in limbo. So, as you can see, this whole thing is a lot more than just filling in a form. You've got to figure out if you need a core or a letter of confirmation. You have to apply in the right way for your situation. And then you might need to get it legalized with an apostille. Every single step has a potential trap that can cause serious and expensive delays. The key takeaway here is pretty simple. You don't have to figure this all out on your own. Trying to navigate international tax rules can be a massive headache. Getting professional help from a team that does this day in, day out will save you time, money, and a whole lot of stress by just getting it done right the first time. If you want to make sure your application is handled perfectly, just get in touch with the friendly team at ProTax Accountant. You can reach them on WhatsApp or by phone at 07985689912, or just drop them an email at info@protaxaccountant.co.uk. They're ready to help. And for a really deep dive, you should check out the detailed article on their website. And hey, before you click away, if you found this guide useful, do me a favor and hit that subscribe button for the Pro Tax Accountant YouTube channel. That way, you'll get more clear, practical tax advice just like this. And finally, just a quick but important note. This information is for general guidance, and it's current as of January 2nd, 2026. The tax world is always changing, and of course, your situation is unique. So before you make any big financial decisions, please have a chat with an expert at Pro Tax Accountant for advice that's tailored specifically to you. Thanks so much for watching.